In Full Zoom is presented by Calvo Enterprises, Inc. and IT&E.
Off day, everyone, and welcome to another edition of In Full Zoom. I'm Nestor Licanto. I'd like to welcome our guest this week, Dr. Rosann Jones, Professor of Economics at the University of Guam, and Gary Hiles, who is the Chief Economist at the Guam Department of Labor. Thanks for joining us.
Welcome.
They are,
Thank you.
yeah, they are here to talk about probably not very popular subject right now, but need to go into it a little bit, inflation. Let me start with you, Dr. Jones. What is your assessment of the current inflation situation on Guam? I know from statistics that I just saw in June in the United States, 9.1%, the highest in 40 years. What's it looking like here on Guam?
Well, we are very closely aligned with the U.S. economy, and we have some particular challenges here because we are so dependent on energy, and we have higher energy costs, which really affect most households and businesses on island. So that 9.1% is across the board. It's a broad-based inflationary metric. And I think that Guam has a similar inflation situation here on Guam.
Yeah. And Gary, you've come armed with some statistics for us and some charts. Tell us your take on the current inflation situation here.
Yes, Rosann hit it that Guam's situation is quite similar. The CPI for all urban consumers rose 9.1% over the last 12 months, and items excluding food and energy increased 0.7% in June, up 5.9% over the year. The Guam CPI, and it shows a chart, energy is the biggest factor driving the CPI with 40%. Other items are much less, but even energy goes into the other items, so that's driving the CPI. The Guam CPI has similar results, but a little bit lower than the national CPI. All items as of the latest second quarter through March was 7.6%, so we'll see what happens in the next quarter. So the buying power is about 46%, or 46 cents on the dollar. So what you could buy for 46 cents now costs you $1, almost twice as much as it did in the base period of 1996. The inflation is cumulative, so it's not just inflation for 1 year, but over time it can be, even if it's moderate, it can accumulate substantially over time.
Yeah, pretty sobering stuff. Dr. Rosann, what are the practical or the real impacts of this to our people, people who are on paycheck to paycheck? Imagine how much of an impact that's having on them now. So what are they doing? How are they responding? Less visits to the grocery store, looking for as cheap product as they can find?
Yeah, clearly those that are living at paycheck to paycheck, and others, even middle income earners, everyone right now is looking at their spending and readjusting to what things were in the past, asking themselves, do I need this? Is this essential? Can I forgo something? So that's the first line, looking at what you have been consuming in the past and where you can make adjustments and cutbacks. Unfortunately, with this level of energy cost and other factors that you do need, healthcare costs, food costs, there's not much room for you to cut out of a budget to adjust for the impact of this inflationary environment. So the real concern is on the downside that people begin to look for credit and borrowing, which is, again, very dangerous because interest rates have gone up. So they're trading away the short-term gains of, I have to have these essentials and I have to pay more for them. I can't do it out of pocket, so I'm moving it to credit. That's going to come back and haunt them in the months to come as they're paying a higher amount of money to service that debt. The other problem that they face is that on the upside, it's a good problem, and that is, can I find more work? Can I get back to work? Can I take a second job? Can I find more ways of earning an income? So I think that's going to be a bit of an offset as we talk about recession, as we do have room for the workforce to come back in, workers to come back into our workforce. And that's going to be helpful not only to our workers, but also to businesses. On the business side, businesses are always looking at how can we keep costs down? How can we forgo borrowing? They're probably looking at their profit margins, and they may be seeing those margins eroding due to inflation.
Yeah. Gary, how do you see the business community responding? How are they going to react to their consumers having less money to spend?
Well, the point is inflation and the people's buying power is really the relationship between your income and your expenditure. So the prices of things that you have to buy goes up. If you're that's matched by an equivalent increase in wages and income, then that won't be hurting you. And wages have been going up, but not as much as the recent inflation. So people's situation is worse. So it obviously, if a person can increase their income through training and education and getting a better job, that's what a lot of people are trying to do. And some are successful at doing that to help accommodate the increased prices. And people make their decisions on their budgets based on the relative prices of things. So as prices of things change, then you need to reevaluate a lot of your decisions. You may reevaluate the type of car you drive, where you live to be closer to work, or if the rents are too high close to work, you might move farther away. So as prices change, you'll probably do a lot of reevaluation of all kinds of things. If you're going to cook more and eat out less, grow some of your own vegetables, are suggestions and things that some people are doing to adapt.
In Full Zoom is presented by Calvo Enterprises Inc. and IT&E. In Full Zoom is presented by Calvo Enterprises Inc. and IT&E.
And Dr. Jones, so what businesses in particular are most affected by inflation? Gary mentioned people eating out less because of trying to maintain hold of their budget. So businesses like restaurants?
I would say that normally, but I also, as we talk about what they would do or what they should do or what's rational to do, we're also coming off a period of, which is being called in the media, revenge spending, getting out there and going to restaurants, taking that trip, going to hotel stays, trying to recover from a long period where they have sacrificed their ability to live life as normal. So right now, as I go out to restaurants, they seem like they're doing okay. Maybe on their side, they're not doing as great as they once were, but they're not shuttering. So I don't know how much of this is kind of the last gasp of spending. I'm kind of looking forward to what's going to happen in the fall season with the return to school and the revenge cycle. People begin to pay that price for that revenge spending. Will there be a continual going to restaurants, hotels, travel? Will those things continue into the fall period? So that's a time to watch. But one of the things when you talk about businesses on Guam, rather than just looking at the type of business that they are, tourism seems to be doing better right now. But I'd like to look at the small businesses and the upstart businesses. I think they are the most vulnerable. Businesses that don't have the deep pockets of profit and stability of profits gained from prior years. They don't have that security. So our upstart businesses are more fragile businesses without deep pockets of profits and revenues. They are more likely to fall by the wayside or take a pause through this, irregardless of what sector they're in. So that's another way of looking at this. Bigger firms that have access to capital and access to reserve profits are in better shape going into this, just like households are. So I think that's another way of looking at it rather than just looking at the particular type of business.
Yeah. And Gary, what do we have to look forward to in the next year or so? What from the business side and from the consumer side?
Well, from the business side, the quick ramp up in the tourism, especially the Korean tourism, is going to be a huge boost for not only businesses, but employment and wages. I watched the airport monitor, and one day I'm seeing 6 flights from South Korea and another flight from Busan. So that's really picking up. So that's going to be a big increase in tourism, and all of the affiliated businesses, restaurants, laundries, and businesses that serve the tourism industry. And that will bring people back to work. But the outlook is going to be kind of continually a bit dismal in the short term. There's two ways I look at it. One is looking at the professionals. Kiplinger letter expects that the inflation rate will remain close to 9% for the rest of the year and then decline after that. Another indicator I look at to see what's in the pipeline is, in addition to the consumer price index, the U.S. Department of Labor, Bureau of Labor Statistics produces another index called the Producer Price Index. That's the prices of things that the manufacturers buy, such as steel, aluminum, glass to make the cars and the windows and all of the other products. And the producer price indexes went up 16.3% over the year ended in April 2022. So goods went up 16.3%, but prices for services went up 8.1%. So as the stores restock their shelves after they sold their merchandise, the new goods coming online will be more expensive, and that will necessitate a price increase. So that's going to be a continuous situation in the short run, but most analysts are currently forecasting that will decline over the year, and that the inflation rate might have hit its peak and should go down going forward. There might be some there's also the BLS does import and export prices. So what's kind of interesting is, from the U.S. economy standpoint, that the prices of goods coming in increased only 0.2% in June, but the export prices, the U.S. Exporters are selling things for, went up. So they're getting more for their exports than their increase in their imports. And this affects us consumers on Guam somewhat, because imports from Japan are a significant portion of the goods we use and buy on Guam. And Japan has a relatively low inflation rate. The latest is 2.4%, but so their prices are not going up. But then when we buy them, that we have to exchange the dollars for yen to buy them, and the exchange rate is much stronger for the US dollar. So that's going to make Japanese imports cheaper than they would have been previously. The downside of that is going to make Japanese tourists to Guam have to pay more, and it's going to be more expensive and be somewhat of a retardant on the resurgence of tourism from Japan.
In Full Zoom is presented by Calvo Enterprises Inc. and IT&E. In Full Zoom is presented by Calvo Enterprises Inc. and IT&E.
Rosann, what how do you think our consumers here in Guam are going to respond in the next 12 months as this inflation persists, as Gary suggests, and is there light at the end of the tunnel? And what is that going to be?
Yeah, I think the key word that you just mentioned is persist. Anything that persists negatively has a compounding negative effect on attitudes and behaviors and beliefs about the economy. And that's one of the things that we have to watch very carefully for. It's not only the data, the numbers, but how people perceive it and how they live it and feel it. And if they feel that there's no hope, if they feel that the economy is not getting better, then that becomes sort of an operating reality. I think there is another upside for Guam, and that is its construction industry, its military buildup. There is a good growth opportunity there for the island that is bringing in revenue for the island, which I would look to say that can offset some of this persistent feeling like we're not getting anywhere, that our economy is not improving. So I think we need to play to that strength and look to that strength for employment, for other opportunities for monies to flow to the government of Guam. The other issue here is, while we talk about the microeconomics of what's happening with businesses and households, we need to keep an eye on what the US government is doing, because much of this is a big story picture of the days when the US government released all kinds of federal monies to support households and businesses through the pandemic. Trillions of dollars went into that kind of public investment. It's now going to be time for the federal government to take on this quantitative tightening. They have to adjust for that kind of layout, that kind of subsidy and support to businesses, state governments, and households across the board. And so there were many who argued that they should have started tightening sooner. And the fact that they are tightening dramatically later is causing some disruption that we're going to, as you look ahead to the next several months, what is that going to look like, and how is that going to affect households and businesses? We have to watch what the federal government is doing, what the Fed policies are doing, because that's going to mean that credit is going to be tighter. Our ability to access what we used to be able to buy in the marketplace may be limited, because when the government goes into paying back its own debt service, they're going to take the money back out of the system. So part of this is good. Part of it is a rebalancing. We can't have all upside with no downside. It's just that this pandemic so disrupted the natural up and down of the economy that we had a very high up to keep us stable through that. And we're going to have to pay back that with a downside. So recessions aren't necessarily bad. It does wash out some of the froth of an exuberant economy. But what's troubling right now is, will this be sustained? Will there be a long-term payback, or can we get this over with more quickly so that we can get back to a kind of normal steady state of economic activity? So my point here is, don't take your eye off of what the Fed is doing, what the macroeconomic indicators are looking at, and what the actions are going to do. And also the other investment in our economy, which is through the defense sector and the buildup that's going on there, and the job opportunities that will come from that investment here.
In Full Zoom is presented by Calvo Enterprises Inc. and IT&E. In Full Zoom is presented by Calvo Enterprises Inc. and IT&E.
Yeah, Gary, as Dr. Jones mentioned, quantitative tightening, which means the Fed raising interest rates. What's going to be the impact here? What do you think people are going to, how are people going to respond to that?
Well, the first impact is that borrowing costs, particularly for housing, is going to be significantly more expensive. That is putting a damper on the increase in the prices of houses because people can't afford it. So that will make houses, the price will stop accelerating so much. The if the Fed over tightens to try to get this inflation under control, there's a lot of talk about the possibility of a recession in the United States. The good news for Guam is I think there's virtually no possibility of a recession in the next couple of years because tourism is ramping up from almost zero to whatever it goes up to will be a significant boost to the economy, combined with the we're in the super expansion stages of the Marine Corps realignment base buildup. So, and in addition to that, there's still a substantial pandemic relief funds available. Have you seen in the news the checks going out for the Peruga plan with the $500, and that will help the relief on gas taxes and also relief for childcare. So all of those things will, for many people, offset the cost of inflation. Not everyone, but for those that receive those benefits will be for the short term to help get us through this. That will be quite a help.
Yeah, I think we've got just a couple of minutes left, but Dr. Joseph, let me just close it out with you. What do you think people should be doing in the next year? And I know one of the reactions to this is people leaving. Is that what you're seeing? And how for the people that are staying, how should they handle this? Buckle up and get ready for some tough times?
Yeah, I think the best thing we can do is stay as positive as we can. Keep looking for opportunity. There are opportunities here. And so don't get into this collective mindset that it's just bad out there. Yes, there are some challenges on the energy side, and there's some challenges with higher prices. But I think we're going to see some momentum out of this because of a return to tourism and the expansion of military. So I think we're in a better position. But that being said, there are some families that recognize that they do have family and family connections in other locations like the States. And there is this inclination to go somewhere else. My warning there is going somewhere else in the States isn't necessarily a better opportunity for those on Guam. It's what's happening in the States right now isn't what was happening there previously either. Their prices are increasing as well. I was just back there. The food prices in the grocery store used to be lower than they are here, but they're rising significantly. So that was kind of a draw in the past. Housing costs and prices are still pretty steep in the States. You additionally have taxes, property taxes that are higher. You have state income taxes. You have local income taxes and sales taxes. So sometimes when you look at the wage rate that you may be able to achieve in another community in the States, the households need to think about what else goes with that. So I think the best thing we can do is stay optimistic, stay planning for the future, get back to work, look for work opportunities. Wages are beginning to rise a bit here, and stay the course and think very calmly and rationally about any long-term decisions that you make about should I stay or should I go? Because unless you are going to some location that is a place where the US dollar still holds a great value and you can offset living expenses with your US dollar. But I think the States right now, going there, family supports are great, but I think there is going to be opportunity here on Guam. It's just going to take us a little bit of time to get there fully.
All right, some good advice. Hang in there, everybody. Times might get a little tough. Inflation is on the rise, but there is light at the end of the tunnel, as there always is. Thank you so much. Dr. Rosann Jones, Professor of Economics at the University of Guam, and Gary Hiles, who is the Chief Economist for the Guam Department of Labor. I'm Nestor Licanto. Thanks for watching, everybody, and we'll see you again next week on In Full Zoom.
In Full Zoom is presented by Calvo Enterprises, Inc. and IT&E.